Hello, 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 hello. Come on in, come on in, come on in. Happy Tax Tip Tuesday. Happy Valentine's Day. I ain't gonna be on here long. I just want to give y'all a few words to let you know uh deadlines are approaching. Time is flying by and it is not good. Deadlines are approaching. Let's see here. I want to drop a link. If you are a corporation, S Corp, partnership, any of those is very, very, very important for you to listen to this live. Okay. Come on in, come on in, come on in, come on in, come on in. Okay. I'm going to go ahead and get started. I am Tracy L. Tate of TLJ Professional Services, where we are about all things financial. And today is Tax Tip Tuesday. Happy Tax Tip Tuesday. I bring you over I'm going to start saying almost 40 years because next year will be 40 years. Almost 40 years in experience in accounting and bookkeeping and tax preparation. Yes, I've been doing them since they were on paper. You hear me? Um, we at TLJ Professional Services, we provide bookkeeping, accounting, taxes, business coaching, business formation, and other business services like tax planning, okay, and getting you loan ready. So today's topic is literally about the corporate deadline. So I was speaking to someone earlier that didn't realize they know that they're an S corp, but they didn't know that the deadline was count them 1 month away. Okay, if you are a S corp or a partnership, so a corp, not a corporation, C corp, but S corp and partnership. Okay, so your deadline is March 15th. It might be the 17th because of the weekend and stuff like that. I've been hearing that, but typically your due date is March 15th for those type of returns. And that is because you need to get the shareholders their tax documents, and then that gives them 30 days to get their returns prepared with the information that you provided. Okay. So if you file an extension, they should file an extension as well. Otherwise, they would have to do an amendment, which doesn't make sense to do because that takes longer. But some people don't like to wait. So I'm dropping our calendar in the link. Go ahead and book your free consultation. Um, and see if we are a good fit for you. One thing I always express is the importance of using the same tax preparer year after year, unless you have a bad experience, right? Because one of the benefits is that they learn about you personally and about your business, right? So by you being a recurring client, certain things that we look for when you return, right? We know what we filed for you last year, so what changed? um, if you don't provide us with the same documentation. We know to ask for that. Okay. So if you have anything new, if you go to a new tax person, they won't know any of that. And it's relied upon you to provide all of the information. So something I hear time and time again is that not everybody will ask you about additional documents that you may have. They run with what you give them. So if you give them incomplete information, guess what? So is your tax return. And whether that's from a deduction side of things, if you're a business owner or lack thereof, I should say. So you may end up overpaying on taxes by doing that. So again, by working with your same tax preparer year after year, we learn certain things about your business. We learn certain things about you personally that when things change, not only is the conversation that this changed, but we're aware of it beforehand a lot of times, right? And we definitely need to know about it ahead of tax or preparing your taxes. So if you are a partnership, meaning a LLC, or LLP, basically it's more than just you in your LLC. then your deadline is March 15th. Now, I had someone else ask me about uploading bank statements. No, don't give your tax preparer no bank statements. You're supposed to give them your totals. Otherwise, it's additional fees because guess what? We have to get your totals for you. So just be mindful of that. If you use a software, which you should be, if you're in business, you should be able to afford a software. Okay. If you're using a software, that software can produce your financial statements. That's all that's needed to prepare your tax return, no matter what type of business structure you are, even including sole prop, right? To prepare a tax return, having some financial statements definitely gives us most of the information that we want to have. However, if you commingle accounts, if you pay for stuff outside of your um, tax software, I mean, your financial tracking software, then it would not be on your financial statement. So what I mean by that is, let's say that you have a credit card that you use, but you use QuickBooks. You've only mapped your bank account, but not your credit card. It's not getting all of the expenses that you paid for, right? So that's another instance of where you could be leaving money on the table, overpaying on taxes. Um, and that could be a heavy tax burden, especially if you have more than one card that you might have missed some items on, or you commingling your bank account because you're going to miss a whole lot of items a lot of times. Like I've said before on my lives, trying to remember what you did in January, and here we are, February the following year. My brain don't work like that. So I'm speaking from me, right? I'm talking about me. My brain don't work like that. So I make sure that I do all expenses through my business account because then it leaves the guessing out. What was this for? All of those good things. So having that software is beneficial to tax time because it is tax time. And for us at TLJ, it's tax time all year long. So we do accept clients all year long, both personal as well as business, as well as nonprofit. Okay. So we specialize in nonprofit returns, we specialize in business returns, but we do individual returns as well, because of course that's the foundation where we all started, right? Doing individual returns. So um to recap, because I am making it short and sweet, it is Valentine's. Ain't nobody trying to be on Facebook or on live um, today. So, but I did want to stay true to this Tax Tip Tuesday. So, I am Tracy L. Tate. I am the CEO of TLJ Professional Services. We are about all things financial, bringing to you almost 40 years of experience in bookkeeping, accounting, tax preparation, and other business services, coaching included. Um, and this topic has been around if you are partnership or S corp, your tax deadline is March 15th or there around March 15th because you have to get the K1s or the shareholder statements to them early enough and in time enough for them to file their personal return. Okay. So that's very important. If you file an extension for the business, it also files an extension for the personal, which some people like to get their stuff done and out the way, right? By the way, it does not extend the tax debt. Okay. So if you haven't been prepaying taxes quarterly, if you're a business or withholding taxes out of your pay stub, then you want to pay, at least prepay some kind of tax bill by the deadline so that you will not be penalized. Now, if you are a partnership or a S corp, the business does not pay taxes because they're pass-through entities that goes to the shareholders. However, you may have franchise tax. Your franchise tax may still be due, depending on what state you're in. Okay, and the amount is dependent on what state you're in as well. So be mindful of that. If you do not have a tax preparer, again, we take tax clients all year long. I did drop our calendar link in the chat. So feel free to book your free consultation and we can see if we're a good fit for each other. Okay. So with that being said, happy Valentine's Day, happy Tax Tip Tuesday, and you have a blessed day. Many blessings.